Welcome viewers to the Money Show, and for our first discussion, as we know that the due date to file your income tax return is around the corner. If you are a trader with income from futures and options, that is very risky, but still that income includes intraday trading. The profits from such activities must be disclosed as business income in your returns. And on to the Money Show today, we will have on board TP Oswal, who is an international tax expert, to understand how are these gains taxed, the type of ITR form you need to choose while filing the returns, and a lot more. So let's get started. But before that, a very good evening, Mr. Oswal, and thank you so much for your time to ET Now. A lot of questions right there, and we will take it to one by one, and a quick answer expected. Wherein first up, let me ask the question that whenever somebody is going to file the income tax returns, what sort of forms they need to take care of while filing the returns, and especially when it comes to the filing of the returns for their F&O income, what sort of a form they need to be looking at?
F&O income is considered as a business income. It is not considered as a speculation. So therefore, that income, if you have, generally form number 3 is applicable in such cases. So you will have to file the return in form number 3, which is a business income. You must file the return before due date. Otherwise, if there is a loss in F&O activity, it will not be allowed to be carried forward. That care has to be taken. And if the F&O activity results into a turnover which is exceeding the limit under section 44AB, you have to do a tax audit as well and file your tax audit report along with the return of income.
Two things to be taken care of. That 31st is the deadline. Before that, you can't carry forward your F&O losses. Mr. Oswal, just wanted to know that is there any time limit that viewer or the investor rather can actually extend this F&O losses? Is there any time limit on that? And also just wanted to get a clarity on what is the difference between an intraday trading a profit or a loss or a speculative income that you were just highlighting. Is there any difference in that?
Both the answers. As far as the speculation income is concerned, if the loss is there, it is allowed to be carried forward for 8 years. And therefore, if you have filed the return in time, you can carry forward for 8 years. If you have not filed the return within due date, then your loss carry forward is lost. You cannot set off against the subsequent year's profits. Now, second question is intraday trading. If you say my trading is, I just bought in the morning, afternoon I squared it off by closing, by purchasing again, it means neither you have taken delivery nor you have given the delivery. And the law says very clearly, in case if you have not taken delivery and given delivery, then it is considered as a speculation activity, and speculation will be a separate head of income, and you will have to file your same return but under the speculative income. In case if there is a loss on speculation, also return has to be filed in time. And the loss on account of speculation is allowed to be carried for 4 years and not for 8 years.
Thank you so much, Mr. Oswal, for giving us that clarity for all the viewers. But Mr. Oswal, just wanted to understand as well that a lot of viewers still find the difficulty in calculating the turnover. As per the norms, how exactly is turnover calculated, and what will be your suggestion to anybody who is actually filing the tax himself? So what are the procedures or what are the points that the viewer needs to take care of?
In case of this forward trading, future and option, the net margin difference between the buying and selling is considered as a trading, is a turnover. And accordingly, if the turnover exceeds 10 crore, you'll have to file the tax audit report.
Okay, Mr. Oswal, since we have a lot of viewers that are constantly connected with us, and I also got a couple of queries, allow me to post one particular query to you, because the viewer asked that if we are discussing this, then a clarity on this will help. So he says that if somebody has an annual income of 20 lakhs from the salary, which exceeds the basic exemption limit, Now, additionally, I have a turnover of 80 lakhs from futures and options trading and unfortunately happened to incur a loss of 5 lakhs in FNO. Now, as per the income tax regulations, do I need to conduct a tax audit in order to carry forward these losses for future assessment?
For this example, no. Answer is no. The turnover is within the limit. There is no tax audit applicable.
Okay, so if I only have futures and options transaction and no other income, then can I forward
No,
the...
no, no, no,
Okay.
no. Whether this is not relevant, whether you have other income or only future and option income. If you have got a derivative income and that income is exceeding 10 crore, then tax audit is applicable.
Okay. Okay.
80 lakhs is the example you gave, and therefore it is not applicable.
Okay, that helps the clarity, and I hope that the viewer also got his question. But coming back to now, how a lot of people are holding these shares for a long period of time. And Mr. Oswal, I just wanted to have your view on that, because back in before 2003 and 2004, we didn't had the concept. Like 2004, LTCG was abolished, but some years back, LTCG was once again into the gameplay. Mr. Chidambaram actually came up with STT. Till date, STT is ongoing along with LTCG. So what are your views that a viewer or an investor or an FNO trader should still continue to pay that STT amount? Is that fair, or is this something that the government needs to take care of?
You see, Chidambaram, you rightly said that Chidambaram introduced STT. And the promise was given that we are abolishing long-term capital gain, and he has abolished that. But sooner than later, it was expected this will happen. After few years, after next year, Chidambaram introduced STT on purchase and sale both. Initially, it was only on sale. So therefore, we are one of the unique countries where STT is payable on purchases as well as on sales. Later on, they increased the rate of STT as well. Initially, it was introduced at a 0.25, then it was increased later on. So therefore, in this country, whenever any new tax is introduced, there is no guarantee the promises made by the government will continue, and they will go on changing their promises. Now, hello?
Mr. Oswal, please go on. We have you with us.
Okay. And now then, we have now reintroduced long-term capital gain, and we continue STT as well. Where was this capital gain exemption gone? When I am paying 10% or 10% tax on the capital gain, why should there be an STT? Abolish STT at least. Be reasonable. Don't take advantage of the people who are so docile, who are not objecting.
Okay.
We do not have an association
Please
of
allow me to
investors association, or we do not have taxpayers association. There should be a center for taxpayers association whose voice should be heard by the government.
Yes, Mr. Oswal, I just got a bit deviated in terms of getting your opinion on STT, but coming back to helping our viewers that how they need to take care of while filing their FNO taxes. So now that we have the LTCG in place, which is long-term capital gain tax, and a lot of investors keep holding the shares for this long. So where to show the value of the dividend income and the bonus shares, and how to go about it?
The dividend income is always shown under the head income from other sources. And bonus shares are not taxable, but therefore you have to include in your schedule AL, which is forming part of the return, where original shares are shown. Along with that, increase the quantity of shares, because bonus share is a free share granted to you by the company. There is no cost incurred by you. So you have to increase the number of shares in your schedule LA. That's all. AL, that's all, nothing else.
But now we are seeing such a good boom in the IPO market as well. A lot of listings happening, and the investors are also getting good gains. Though 2022 wasn't a great year, but how will the income tax be calculated on the gains of the shares that are subscribed in the IPO?
You see, if I get the shares in IPO, it's first of all, good company means lottery. And generally, I will not so sell it immediately. So the period of holding, if it is beyond 1 year, is long term. If I sell it immediately within 1 year, then it is short term. And if it is a long term, the tax rate will be 10% because the company is listed. And if it is a short term, the company's tax rate will be 15% because the company is listed. For an unlisted company, the rate of taxes are different.
Get your understanding. But Mr. Oswal, now we are seeing that trend shaping up, that a lot of investors are looking to give, or rather gift, the shares to others. This is something that still needs a lot of building. A lot of viewers are still not aware, but a lot of have started incorporating this. So who will pay the tax on the dividend where the shares are received as gift?
Well, if the shares are received as a gift by a relative, then it is not taxable in the hands of the recipient. But if I receive the shares, if I give you the shares, you will be liable to pay tax on the value of the shares received if the value exceeds more than 50,000 rupees. So very clear. Now, if I give shares to my wife, the income derived from such gift is taxable in my hand. So the dividend will be taxable in the hands of the person, in the hands of the donor, that is spouse, who has gifted to wife. Similarly, if I gift the shares to my son's wife, the income therefrom will be taxable in my hand only. It will be, this is known as the clubbing provisions. Under section 64, income is deemed to be your income only, even if the asset is transferred directly or indirectly to wife or son's wife. If I transfer the shares to minor grandchildren means son's son, then the income therefrom arising therefrom till his minority is taxable in the hands of the parent, whosoever is income. The parent means mother or father, whosoever's income is higher. So if the gifts is received by minor, income is clubbed along with the parent's income. If the gift is received by the wife, the income is taxed in the hands of the husband. If the gift is received by son's wife, then the dividend income is also taxable in the hands of the donor, that is the grandfather, the father-in-law.
A lot of things to take care of, and a lot of family tree mapping also be done. But Mr. Oswal, we also got your understanding that over 8 years of period you can carry forward the losses or in F&O. But which expenses can actually be claimed by F&O traders? There are some more additions as well.
Well, if it is a business income, all expenses related to business will be allowed to be deductible. There is no reason why it cannot be allowed. For example, if you are carrying out these activities systematically, and you have employed people, you have got a full-fledged office, you have got computers, depreciable item, you have got peons, every expenditure is deductible like any other business expenditure, provided you have demonstrated the documents. Yes, these are the expenses I have incurred and I am entitled to get the deduction.
Okay, understand. But Mr. Oswal, just wanted to understand that how important are AIS and Form 26AS for the purpose of ITR return filing?
Important. These days, filing return is a really tedious job. It is not simple job. A chartered accountant takes long time, and unfortunately, this is one area which you have asked me a correct question. You see, AIS and AS both are uploaded by the government or the agencies in 15th of June. Now, you have to file your return by 31st of July. It is an impossible task to complete because you are handling so many taxpayers and you have to complete everybody's return. You have to match every information given in AS and AIS, both. And without matching, you cannot file the return because there will be, for example, if you have PAN account holder, PAN number is given to any party, and you have done a very high value transaction which is reported in AIS, then all these AIS information you have to collect and match with your records, your bank account. Otherwise, there is a chance that you can be caught by the tax department for having not reported certain transactions which you have incurred. Similarly, the incomes arising on which the tax is deducted at source, which appears in the AS, you have to also match those information with your bank account, with your statement which you have prepared, on the basis of which you are going to file the return. So matching of the information in a smaller SSC, very easy. But a person who is doing transactions on a day-to-day basis in share market, matching of the information takes quite long time. Huge number of transactions taking place. You have to deploy people who will match everything. And believe me, this AIS gives information inaccurately also. And in case if this information is inaccurate, then you have to also ask them to correct it first. If you are a joint account holder with your wife, the AIS will show the information in both the parties' accounts. That is your husband and wife's account. So therefore, there also you have to ask them to correct it properly, and you take the first holder's name as the basis of disclosing the information, but at times appropriate disclosures are also required in the hands of wife. So therefore, these are the cares required to be taken. And these days, filing of return is very difficult job. It's not an easy job. A lot of people believe that they themselves can file the return. I honestly don't know how to file the return myself. So I depend upon my chartered accountants in my office who helps me in filing the return.
Mr. Oswal, but a lot of viewers or a lot of a lot of people actually look up to you to seeking the advice on how to file the return rather. But before we let you go, Mr. Oswal, just wanted to have your take because you have a rich experience that till date. What are some of the mistakes that people generally tend to do, and anything that they really need to take care of which you feel that is something that they always ignore?
Most important advice I can give you on that is if you have got any foreign assets, for example, a bank account, shares in a foreign company, property in a foreign country, or any other financial information or non-financial information concerning you in your name. For example, you are also holding a car and car is in your name in a foreign country. Please note, they are all required to be disclosed in income tax return. You may ask me a question, sir, these are assets. Why they should be disclosed in the return of income? But unfortunately or fortunately, we have been copying best practices of the world, and we found this practice in some countries, so we adopted that. The Schedule FA was introduced in Income Tax Act from 2015, and therefore it is required to be mandatorily required to be disclosed. Please understand the consequences. If all the foreign assets are not disclosed in your return of income, and at times I can give you some more examples. You are employed abroad in America, and the pension, the amount which is deposited in section 101K return, this is the money like our provident fund money which we deposit in provident fund account balance. Similarly, in USA is 401K balance, or in other countries there will be another balance. So all these are required to be reported. If you do not report any of the assets in your return of income, please note there is a provision under the Black Money Act that these assets are said to be treated as black money if you can't explain the source. If you explain the source, fine, they will not tax it again. But they will levy penalty of rupees 10 lakhs, even for a small asset which is not disclosed in the return of income. So the most important thing which I advise every viewer, that Schedule FA must be complied carefully. There is no other penalty under the Income Tax Act except inaccurate particulars we fill up in the return of income. So therefore, all other provisions you can take care. In case if the returns are filed with inaccurate disclosures, possibly you will get a chance sometimes, because under section 139(9) return, the income tax department can ask you to cure the defect within 15 days. But there is no provision for curing the defect of Schedule FA. And therefore, please be mindful that Schedule FA should be prepared and correctly, properly done. And as far as form, while filling up the form, that 26 AS or IAS should be completely tallied with your bank account, with your assets, with your liabilities, and with your transactions. So that as and when the scrutiny comes in your return of income, you are confident that whatever you have filled in, income tax officer cannot go beyond that. You have no business. You can have a full sleep night without any sleepless night. So that is one advantage. And lastly, I would say when you are when you have bank account, maintain and give them the PAN account number to ensure timely refund. In the return of income, give the bank account detail and the PAN account so that you get the refund of your tax refund in time to your account directly. So these are the basic things which are required to be kept in the mind while filing the return. And lastly, if you are a loss-making company or loss-making assessee, file the return in time so that you get losses carried forward. And loss can be, except salary, loss can be under any head. Income from house property, there can be loss. Business income, there can be loss. Capital gain, there can be loss. Income from other sources, also there can be loss. Salary, I have not come across anybody suffering losses on account of which he has to bother about filing return.
Hope, Mr. Oswal, that somebody should not have a loss in the salary as well. That's I'm hopeful of. But with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping all of viewers understand that either they are trading in F&O, how exactly they are taxed, and what are the points that they need to be taking care of. Pleasure having you as always.
Thank you. Thank you.
So that was the discussion all about that if you are an F&O trader, so income tax filing deadline is very near and what points that you need to be taking care of. We were chatting with international tax expert Mr. T.P. Oswal. But moving on, viewers, let's get you the highlights from WEF report, wherein according to the recent survey of the Chief Risk Officers, that is CRO community of World Economic Forum, the geonomic and geopolitical relations between major economies are likely to be unstable over the next 6 months as a result of the world facing growing economic stability and political tensions. A recent survey indicates that 85% of CROs expect continuing changes to the financial and the economic climate, while over 75% of CROs believe the use of AI technologies poses reputational risk to their organization. Meanwhile, armed conflicts and regulatory changes are also cited as the potential threats to the organization. The conflict remains for the fact that while dealing with the rising prices and supply disruptions, the organizations are increasingly confronted with a variety of ethical and societal hazards that are significantly more difficult to navigate than regulatory compliance alone. So those were the highlights from this particular report. But with this, viewers, it's time to step into a short break. But don't go anywhere. A very interesting discussion lined up ahead with two of our special experts. That if you are somebody who is going to abroad to either to study or for a job purpose, how you should manage your finances. We'll discuss all of that, but right after this quick break.